Then we had this 40% pullback around the banana zone. The boring zone. So this is the boring zone area where around the Bitcoin halving. And that period, you saw a sharp sell-off, pretty nasty, and then eventually it broke high. And then we had another 38% pullback before you really got into full bananas. That's how this works. The banana zone is not about here and today and break out immediately. It's a process by which prices accelerate over time once they're free of the ranges that they're in.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. On Friday, fears of a US recession triggered a global stock market rout. Japan's Nikkei saw a significant 12% drop on Monday, marking its most challenging day since the Black Monday crash in 1987. South Korea's Kospi Index experienced a significant decline of 9%, while the Nasdaq saw a sharp drop of 6% immediately after the opening bell in New York. The crash quickly affected the markets, causing major cryptocurrencies such as Bitcoin and Ethereum to experience their most significant daily declines since the FTX collapse in 2022 and 2021, respectively. The stock market volatility gauge has experienced a significant surge of nearly 90% in just a few days, approaching levels not seen in years. However, there was a slight rebound in the market on Tuesday. There is still a lingering sense of uncertainty as many people wonder about the wild gyrations that occurred on Monday. Is this the end of the global sell-off that began last week, or is it just the beginning of a widespread crash that could have long-lasting consequences? For popular macro analyst and former Goldman Sachs executive Raoul Pal, it's just another day at the office. Pal sees the sell-off as a potential boon for the crypto market, as it may compel central banks like the US Federal Reserve to lower interest rates and halt other tightening measures. In one of his recent tweets responding to the crash, Pal expressed his thoughts. "I have been discussing and analyzing the Chinese economic situation extensively, emphasizing the importance of the dollar and yen being lower to facilitate policy easing without compromising the value of the RMB." Additionally, it is worth noting that Janet Yellen has visited China twice to address this matter. As a result, it is evident that the reduction of US interest rates is now being implemented to provide further support. The Japanese revaluation of the yen was a component of a broader consensus among central banks to infuse liquidity into the system and stimulate recovery. Global growth momentum. Everyone could benefit from a weaker dollar to increase liquidity and loosen financial conditions. With the expertise of a financial analyst, it will efficiently resolve the current situation created by the recent change in leadership. The dominance of the US dollar is no longer an obstacle in the grand scheme of things. Recent video, Pal delves deeper into the significant macro picture, shedding light on how this crash corresponds to his forecasts for the US and global economy, as well as the crucial aspect of cryptocurrency prices, and lots of things Raoul Pal discusses, so please watch the video to end. And share this video, and subscribe our channel, Everyday Finance. Thanks.
So you guys are freaked out by the volatility. I've tried to explain with my don't fuck this up thesis that 35% pullbacks are normal and sometimes more. You see, often in crypto markets, we get these, and really they're opportunities to add and not freak out. This is why I urge the longer term time horizon. So I've been in this market of 2013. So I'm going to show you all the times I've had to deal with volatility like this. So here's a nice one. 2013, I got in around here. It then had a 71% pullback. Now, this is early stage. So this is like a smaller token now, probably something smaller than Solana, more like an alt would trade. So in what looks like a sideways market, it actually did a down 71%. And then it did a 15x into the end of the year. So that's kind of how alts act in this. This is when Bitcoin was essentially an alt. It was a small cryptocurrency, not yet with full adoption, not yet proven. Okay, then we go into the 15, 17 cycle, which I think is a very comparable cycle to now. We talked about 2016 with the spasm. Well, before that, we had a sell-off of 35% in 2015. So that will be something from last year. If we think about those cycles that repeat, the election years are always the macro summer years. So we'd be in 2016 now. So 15 would be last year. Guess what? We had a sell-off last year, and then we had the rally into the end of the year. Okay, very similar. Then we had this 40% pullback around the banana zone. The boring zone. So this is the boring zone area where around the Bitcoin halving. And that period, you saw a sharp sell-off, pretty nasty, and then eventually it broke high. And then we had another 38% pullback before you really got into full bananas. That's how this works. The banana zone is not about here and today and break out immediately. It's a process by which prices accelerate over time once they're free of the ranges that they're in. That does lie ahead. I know there's a lot of people like, oh, Raoul, and you're fucking bananas. You're a top signal. Listen, you're not listening. This is not a short-term timing signal. This is the structure of markets I'm trying to talk about, and I'll show you a bit more on that. But that was that cycle. There was some pretty brutal. There was 35 to 40% pullbacks. And what a cycle that was. By the end of 2018, this thing had really flown. Okay, so this is the 2017. That was after those corrections. We had 4 more corrections of 30 to 40%. 4. So this should be sort of where Solana is now, where the size of the corrections, that's the sort of liquidity Bitcoin was, the size in market cap it was then. So this is, we're seeing similar in Solana now. Bitcoin is now much larger market cap, so its volatility is compressed. But this should be looking like Solana, where you start to see these sharp 30, 40% pullbacks, and they're just pauses that refresh, and you keep going higher as the banana zone kicked in. So even with 4 30 to 40% pullbacks,
MicroStrategy is looking to sell its Class A shares in order to raise up to $2 billion. The company aims to use the funds for purchasing more Bitcoin and for general corporate purposes. In a regulatory filing with the U.S. Securities and Exchange Commission, the Virginia-based company did not provide a specific timeline for the share sales or disclose the exact amount that would be allocated for buying Bitcoin. June, MicroStrategy initially announced an offering of $500 million in unsecured senior convertible notes for the purpose of acquiring more Bitcoin. However, just 1 day later, they increased the offering to $700 million. MicroStrategy, co-founded and led by Michael Saylor, has become the largest public holder of Bitcoin globally. With a current holding of 226,500 Bitcoin, valued at over $14 billion, subject to market changes, the company is determined to maintain its position. MicroStrategy proudly identifies itself as the world's first Bitcoin development company, dedicated to fostering the growth of the Bitcoin network through its involvement in financial markets, advocacy, and technology innovation. Last week, MicroStrategy reported a net loss of $12.6 million, or $574 per share, from its software business in the second quarter. Bloomberg reported that the company relies on income from its software business to fund Bitcoin purchases, which resulted in the company's second consecutive quarterly loss. Bloomberg reported that analysts are closely monitoring its cash flow situation. Let's back to the Raoul Pal interview.
Bitcoin went that year from, I don't know, I'm just eyeballing the chart, 1,200 and ended up at 20,000. Okay, I'm not saying we're going to repeat that, but this is the kind of thing that plays out. So if you're dealing with too short-term time horizon, trying to top and tail it and time it, I think you'll fuck it up. I simply do. I think you'll miss the move. The best thing to do is to try and scrape the sofa for change and stick it in the markets when you get a sell-off of any magnitude. Because guess what? It compounds really fast and the gains come much faster. You'll be back at all-time P&L highs before anybody else. That's why I prefer to add on the dips and not try and trade it around, because often you get sidelined just when you shouldn't and the market's ripping and you can't get back in. Okay, 2019. Well, that was a tricky one as well. We had a 54% pullback in Bitcoin between June and December. Then we rallied, and then we had a 62%, and that was obviously COVID when the world shut down. So you've got to be prepared for the volatility to be able to deal with these things. I don't think we have a repeat of 2020, but 2019, you know what? It's possible. I don't think that to be the case, but maybe something more protracted in the Middle East could cause something like that. But again, in the end, if your time horizon is long enough, it doesn't matter. And if you can buy, that's when you make generational wealth. So, real wealth, how to unfuck your future is to take advantage of the sell-offs and not fear them. As long as you're in spot, not using leverage, you're not in the stupid last cycle shit. You're in the coins that matter, the top tier, the top three. I know you've all got your favorites. You want XRP to do it or Cardano and everything else. I urge you just to be slightly more conservative. Conservative still means huge gains, but I don't want you to miss the opportunity or to get carried out just when the opportunity is arriving. So those are the corrections. Then we saw in 2021 two corrections. One was 31%, one was a gigantic 55% before it went back up to new highs. And then we had that kind of stunted high. So the point being here is expect corrections. You can expect anything between a 30 and a 50% correction to happen, and you shouldn't be fazed by it. You should be actually looking forward to them. So that's what we're doing now. That's the kind of cycle we're seeing now. Now, I wanted to go back also to ETH, because ETH was a smaller token back in 2019, 2020, and we had a 67% pullback when Bitcoin had done 51 and a 68 when Bitcoin had done 62. So more volatile, earlier stage tokens tend to underperform on the downside and outperform on the upside. So just keep that in mind when you've got your asset allocation, which is why I'd rather hold the bigger tokens and not have too much stuff further out the risk curve. Memes are fun. I own some memes, but I don't own more than 10%. And that's what I've said to you is please don't own more than 10% in the stupid liquid stuff because you think it can do 100x. I understand that, but it'll still make you a lot of money if it's less than 10% of your portfolio. But it won't do if your whole portfolio is those and it goes down 99%. Again, it's part of this don't fuck this up thesis. It's super important. So let's talk about the banana zone, because everybody cares about banana zone. All of our hopes and dreams are in it. And I don't want the stupid fucking, well, you promised bananas. I've never promised bananas immediately. I've told you this is how it plays out. This is a period of time. I've also talked about the boring zone. So you've seen this chart before, but now we've just added the percentage corrections in the boring zone to make it even more clear to you guys how this works. So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right. So it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money.
Last Monday, Bitcoin experienced a significant surge, reaching $70,000, a level it hadn't reached since early June. This surge was attributed to a favorable speech by Donald Trump at the 2024 BTC conference in Nashville. However, the price increase was short-lived. Bitcoin experienced a significant drop to $62,400 by Friday due to the U.S. July jobs report, which showed a 3-year high in unemployment rates. This news also impacted Wall Street, leading to its own setbacks. Bitcoin's decline persisted through the weekend, hitting a fresh low of just under $660,000, the lowest it has been in 3 weeks. Expert predictions indicate that the market analysis points towards potential further declines if the current bearish trend continues. There is a possibility that Bitcoin may experience a retreat to the mid to low $50,000 range, which is similar to what has happened in previous bull markets. Based on these predictions, it is possible that Bitcoin may experience a further decline, potentially reaching a range of $40,000 to $50,000. These observations are based on past trends of notable declines after significant increases. There are various factors that have contributed to the decline in Bitcoin's price, including significant outflows from investment vehicles that primarily focus on Bitcoin. Friday alone witnessed a significant outflow of over $230 million from the ETF, adding to the existing problem of a lack of positive momentum. Bitcoin has been facing challenges in maintaining its position above crucial support levels. Market analysts have also highlighted a widespread feeling of investor unease driven by upcoming economic indicators that could impact Federal Reserve policy decisions. Investor sentiment has undoubtedly been affected, with many feeling apprehensive about the potential direction of future economic policies. The current situation highlights the unpredictable nature of the cryptocurrency market, where events like regulatory news can have a significant impact. Market liquidity and macroeconomic conditions have the potential to cause substantial fluctuations in prices. Experts are closely monitoring these developments, paying special attention to how new economic data could influence the actions of the Federal Reserve in the coming months. The recent downturn in Bitcoin's price emphasizes the interdependence of global financial markets and the influence of economic data on investor behavior. While Bitcoin's resilience is often praised, the current market conditions serve as a reminder to investors of the inherent volatility and risks associated with cryptocurrency trading in the future. Market participants must navigate the turbulent waters, closely monitoring economic indicators and policy decisions that may impact the digital asset landscape. Staying informed and vigilant is crucial for anyone involved in this dynamic and rapidly evolving market. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.